Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
We are kicking off the new month of July with a couple of strong buy stocks that our strategists want to present to you so that you can hear more about them. Strategists like Ben Rains, who sits here next to me at the desk, and Brian Bolin, who joins us on Skype. And Brian, we're going to start with you. You are talking about a company called Diodes Incorporated.
Diodes Incorporated, that's exactly it, Terry. And the ticker is DIOD. It is a Zacks rank #1 strong buy. And it's got the style scores of A for value and A for growth. Those are strong style scores. And, I think one of the reasons that we have this excellent style score here is because the stock has been looking really good. So #1, we've got a great history of beating the number. We can see down here on the bottom part of the screen, 4 beats in a row, the last one being the biggest, and I like to see that, obviously. So at 8% average here, but when we see the trend looking better like that, for the most part, you have to like that. The other thing I like to see is earnings estimates moving higher. So we can see for this quarter, 67 cents to 75 cents. Next quarter, 71 to 80 cents. Those are nice numbers here. But here's the real big move and the move of importance, from $2.50 to $2.80. That's a big move up, and that's what we really like to see. There isn't really that much of a move here for next year. The visibility isn't fully there. But, I think that'll change here in the coming quarters. If we take a look at the valuation and the reason why this has an A for value, we can see that it is a 13 times forward earnings multiple. And when we look at another measure of value, we think of price to book, and that's 1.8 times. Now, for a semiconductor company, those are some really, really low numbers. One of the reasons that I also like this is you can see the margins here moving up from 9.4 to 9.9 to 10.6. So consistent moving the number higher here is something we like to see. I'm gonna wrap this up here with a look at the chart. And, this one's really easy to kind of follow along here. Just nice, steady, slow moves up here on the earnings estimates. Right here, and now the 2019 number. If it keeps on going like that, we're probably going to see the stock continue to move higher. Now, there has been some herky-jerky movement on the stock, ups and downs and ups, but we just got news that there's going to be a ceasefire on the China trade talks. They're going to get back to talking, get this deal done, and when we see that, I wouldn't be a bit surprised if we see the stock really roll higher here. All the semiconductor stocks are moving higher on the hopes that this deal gets done. I wouldn't be a bit surprised if this stock sees $42 in that all-time high range here in the coming weeks and months, as this deal looks to get done here sooner rather than later.
Okay, Brian, thanks. Ben, you have Chipotle Mexican Grill.
Yeah, Chipotle, that's a company that I've helped a little bit too much maybe over the last 5 years. I used to eat there about maybe once a week, now down to about once a month. I stuck with them through the E. coli scares because that was where they had gone on this massive run, and then there were about a 3-year stretch where they just tanked on the back of multiple foodborne illness outbreaks.
Yeah.
But over the last 18 months, they're up 133%. They're up 80% almost year to date. So this is a big comeback from Chipotle, and this kind of all happened over the last 18 months after they hired a new CEO. He took over from he was the head of Taco Bell. Mm-hmm. And they haven't gone the Taco Bell route where they're changing up their menu every day or two, coming up with some random thing. Instead, he stuck to the core fresh ingredients, healthy options, which is now something people seem like they want all the time. Mm-hmm. With this new plant-based craze, they're also always offering vegetarian and vegan options already. So that's kind of a way they have a leg up on the competition already. But really what we're seeing is that they have a big digital growth and a delivery push, and they have a new rewards program to keep people coming back, keep you enticed. So that's all been happening over the last year. So for instance, fiscal 2018 revenue was up around 9%, comps up 4%, digital revenue up 42% for the year, to account for roughly 11% of sales. And then Q1 was even better in terms of all that. Revenue was up 14% last quarter, comps up 10%, which is insane. Digital revenue up 100% and now accounting for roughly 16% of sales. So that digital growth, that delivery, which is what all of these retailers and restaurants are really trying to do, has proved to be good so far. We're also seeing them beat over the last couple of quarters on the bottom line. And then really if we look at this chart, we'll see that since roughly the beginning of 2018, they've gone on this stellar run as earning estimate revisions continue to climb for fiscal 2020 and 2021. So that it's just continuing to go up. And then after we talked about already this massive top line growth, for the second quarter, our Zacks estimates are calling for 10.5% growth, 10.4% growth for the next quarter, 11.2% for the year, and then they're going to follow that up with another 11% growth the upcoming year. So some really steady top-line growth for this company that had struggled, but it was almost more on like a psychological aspect of, I don't want to go get sick at Chipotle. They had gone on such a big run, and it seems like with the bottom line growth, we're also calling for 43% this year, followed by 30% in the following year, that this could be a company that continues to ride this wave going up.
All right. Do you own either of these two stocks?
I do not.
All right. Brian, how about you?
I do not own either one.
All right. Well, thank you both for the information. Don't forget, you can check out more information on these two companies and many other stocks on our website, Zacks.com. Get over to the homepage. That's where it all begins. With Ben and Brian, I'm Terry Ruffalo.